Yeah, man. Give us, if you would, just a little bit of an intro, man. You got like the coolest background ever. Done a little bit of everything, and you got a hand in everything, and coolest shit guy. And
Well, it's great. Look, I've been selling to banks technology for my entire career. I was an operator, entrepreneur forever, transitioned to the investing side. And then, really, quite frankly, I deal with a lot of banks. I consult with a lot of their boards, and, I talk to them all the time about, you know, innovative DNA, DNA for change. I talk a lot to their boards about guys, and I just recognize a lot of management teams that are just wanting to check out, transition, but they got really valuable banks. And how can we, as a universe, or as a collective, or as a community, scary now, better prepare these folks for 2.5 to 3.0 banking? As we know, you know it, we know it. And we have all these companies that are in and around dealing with the rails and building infrastructure and modernizing the rails. And so we talk about it all the time. And I deal with a lot of banks, and I got the bank network, and I was just like, if we could get our hands and really get the right management team with a bank and do it deliberately, slowly, very deliberately, retrofit it around the three stools of modern digital banking, not just a deposit bank, not just a lender of record bank, and not just a payments bank. Because if you look at, we call it BaaS or whatever you want to call it, it's banking. It's embedded finance. It's where the world's going. I mean, I don't care what you want to call it. It's banking. Banking is loans and deposits and payments. That's what banking do. And I look at all these banks, and I love my bank partners and clients and all this. And I have watched the world of finance hijack the most valuable businesses out of banking, whether it be mortgage outside, maybe whether it be rating the credit card business through the ISO hike, and sit there and say, bank, you have a valuable charter. You can be in the payments business, you can be in the deposit business, and you can be in the loan business. But what if we can retrofit? So that's basically what I did, and partnered up with Chris Black and John Bearden and the group at Thread. And Chris was just one of the smartest guys out there, and he's
Yes.
young and he's ambitious and he loves banking. And I said, Chris, let's go find a bank. What if we could, we would like to find smaller, better, less branches. I don't want to fix anything, but I don't want de novo.
Right. Yep.
If
The
we
dream.
could, and we've got great group of investors and a great board. And so I said, if we could take a traditional kind of central casting bank, build it right, be deliberate, and build a set of extensible rails for other banks to learn with, because I'd rather be with a pack than a lone wolf, to where we can go to the smaller banks that are awake, that really want to invest. Because look, a lot of banks, they don't have the DNA, but the ones that do, that want to invest, and really, we can work together and build something incredibly special right now. We can build something incredibly special because, the world of fintech or embedded finance, it's coming. No, it came about 10 years ago. I mean, guys, it is, this isn't a watershed moment. You are in the middle of the waterfall. This is not,
It's like us with Bass
you,
Association. We get these messages from people like, you're so forward thinking. Thank you for your leadership. And it's like,
really,
we sat around and watched the world go by for so long. We're finally like, somebody's got to do this shit, right?
yeah.
Yeah, we feel
So
like
that's Thread. I mean, in a nutshell. And then,
that's awesome.
so for example, Thread, you talked about SRA. It's a great business. What we were looking at Thread, I said, guys, we're either going to have to build the innovative stack for a framework to manage digitally through a data lake, risk, and the maturity of the fintech model, or the embedded finance. We're all in the fintech business, or we're going to find a company that's done it, because we would much rather license it and then build a standard that others can license. I don't want it to myself, because it does no good to differentiate Thread to have access to this. It does much better for everybody to have access to this, because then we can mature a single model for the regulators to get comfortable with.
Yes. We
Right.
completely agree on, I mean, at so many topics we feel the same way about, and it's like
Yeah.
we need to bring everybody together and share in these things and
having an
standardize.
outside third party try to play API games and then scream that they're regulatory compliant, it's like
Right.
bullshit. If we did this from a bank and did it through a bank in a regulatory environment, that's been the missing link the whole time, is combining those two together.
Absolutely. And I'll tell you, we've both been very impressed with SRA, you know, working with them on a number of things and having conversations, and very sharp data folks, analysts, banking experts, right? And I mean, we're on second or third conversation with them. We are way in the weeds on some depth around benchmarking and things. And I mean, finishing each other's sentences. So we've been very impressed.
It's a great business. So we actually just look for companies because, you know, we're not going to have all the tech in our portfolio. Look, we invest in companies, but we're looking for those growing replicable platforms that can enterprise and go, because an enterprise platform for regional and community banks is a very different platform for national banks for the most part as it comes to technology. Most technology, if you grew up in enterprise in the big four, it's really hard to go downstream because they just hold you hogtied, and it's a great business, but it doesn't scale to 5,000 banks or 4,000 or
like professional services, right? Yeah.
Yeah, it's professional service, a lot of heavy lifting, and that's a great business model. But we look for those businesses that can readily scale throughout the banks, and there's a lot of great tech out there. So, and there's not just one winner. That's what I'm saying. We got to help these banks to find the model. I see a lot of banks trying to pick their own tech. It's not a good idea for banks to invest and build tech. I mean, if they're deliberate and they do it with a group of fintech people that they say, hey, we're spinning this out and this is fully built for commercialization. And if it was done deliberately on day one, yeah, that's a really good business model. And we have a couple businesses that look like that we've invested in. But for the most part, you know, we just want to help these folks. And watershed moments like this tell you, we have a problem when you can create a digital run faster than you can move money.
Yep. And we may have a bigger problem if you can move money faster than, right? Like it's this chicken and egg thing that is just devolving. You know what I mean? It's kind of terrifying.
It's interesting that we haven't heard. I mean, the fact that a crypto crash happened before this is fascinating, because if the crypto crash had not happened, what would the rhetoric be?
Yep. Good call. Good call.
If you're in crypto, this would have never happened. You know,
well, I mean, I think that's the thing that's frustrating for me, listening to everybody talk about SVB and throw darts at SVB, right? This is a great example of multiple fail safes in the system, and basically the trust holding up, the government stepping in, doing whatever was necessary, right? And frankly, SVB was actually in a pretty good spot. None of those protections, laws, regulations, et cetera, exist in crypto land, right? Which is kind of going back to, I think the average person got a little exposure to that in the recent downturn.
Yeah, you think?
Yeah.
Just
exposure. Yeah. There you go.
Just a little bit. But, you know, it's interesting. If we go back a month ago and you were picking a bank to be your venture bank and you lined up 20 of them, they're not a person that 20 out of 20 would have chosen one bank.
Okay. Yeah. Agree.
I mean, they were our bank and they did everything. And I'm saying, you know, they're not perfect, but they did everything that I needed done. So now we're going to have to patch together these services, which can be good for this is what I'm saying. This is the good opportunity for the community and regional banks. And KYB, I'm just going to preach it. It's got a new meaning in my world. And,
I've talked to Chris about this concept before, with Thread and everything you guys are building over there. And I think we're both in agreement around, call it marketing, call it branding, right? But I think it's important, not just to prospective customers or businesses, whoever it might be, but also in the banking ecosystem, whether that's with other banks or with other vendors, et cetera, right? to build the brand and make sure everybody has, knows you, so to speak, doing things just like this so everybody can know what you're about. That's damn important to build a successful bank today, I think. I wouldn't look at it like I'm going to sign a vendor contract and call them a vendor and call their damn.
They're partners. I mean,
other than that, I'm going to be a bank. No way.
But here's what's really going on that I think is so cool right now is that there's a massive technology move in banking that most bankers either are not aware of or they're acutely aware of it, but don't know what to do about it. And what you guys are putting together over there, I think is so cool because it's enabling other bankers to participate without having to have the level of expertise.
Yeah,
necessary.
I really have a lot of empathy, and I see
get there, right?
I see the program and the project fatigue. It's real. And if we can just sell business models, and as I said, if you can just sell NIM, it's a lot easier than selling a tech stack to deliver it. It's
cool. Yes.
But ultimately, that's the game that they've all got. I've had people, say this is going to happen if you don't do it, period. And at first I was a little, and now I'm getting more and more every day to where, there's an evolution coming. And unless you're just so isolated somewhere where there's no cell phone coverage or something, your bank had better figure this out.
I think Joe said it perfect. I mean, look, the days of traditional banking distribution direct to the customer are coming to an end. And we're going to deliver banking through distribution partners that might be freaking Home Depot. You know what I mean? I don't know what they're going to look like. I mean, hey, for this last round, the last 10 years, we've called them fintechs. Now I think we're all fintechs, so maybe, right? Merchants. Yeah, but they're probably merchants. And so I don't want to compete with a lot of merchants. I can tell you that if I'm a banker. I mean,
a merchant now, let's go to the three stools. They need payments, they need deposits, and they need loans. So it is banking. I mean, but it's verticalized. So as I say, the embedded banking phenomena, and we call them ISVs, the industry specific verticals, that's where we're headed. That's what embedded logic's going to do. And it's going to allow you to because you're built by and for. As I think about it, banking's kind of like, the bank is the houseboat. It's not a good house. It's not a good boat. Just kind of sits there, but you got to go to the bathroom or get a new beer or, get a bite to eat. And then you bring your speedboat up.
It's awesome.
And the speedboat checks in with a houseboat. I mean, going with a lake analogy.
I like
and and the speedboat's kind of the new branch. I mean, it's kind of the digital branch, and it's a reality, and it's not slowing down. I had my nephew, he's in a startup, and he started it, and he called me this weekend. He's like, man, should I be worried about my money? And he raised a little seed money. I said, where's your money? And he says, oh, it's at this blank. And I said, that's not a bank. That is an app.
Yeah.
And he said, really?
That's what he said.
He said, really? I said, that's not a bank. And so we educated. He's like, oh my gosh. So that's what happens when the leadership on the board, the backers, the people like us, don't put cash management policies in place and critical stop gates. KYB. Now you're going to see companies doing audits on banks to know exactly. ICS was a thing nobody had ever heard of. Now it's become a household term. I mean, these are the kind of things that we needed this wake-up call.
That's a good call. Yeah.
I think also, we're seeing so much movement in, I'll just call it like an alternative banking technology side. So we've got all these cool things in banking. And then when we get into the fintech that's participating in banking, they don't have.
Right.
And that's, kind of like SRA or others. There's a dozen others I could name that are building pieces of this thing.
It's really like fintech infrastructure to plug things to banking.
That are
infrastructure as a service is exactly what it is.
Yes, exactly. That's the market we've been most interested in of late. And at the moment, you don't have these economies of scales yet. You don't have large customer bases and market share. So you have these really tactical fractional point solutions that are cool as shit. And now there's enough of them that they're all starting to talk and know each other and partner up. So you can feel the ecosystem kind of getting reborn. it's really cool to watch. I'm hoping.
Yeah, but it takes collaboration between people like you and us, and we provide the leadership, we provide some guidance. And I will tell you, most of the young venture-backed companies are building incredible technology. They're scared of banks. They don't understand them. Now there's a time that we can put the olive branch out and we can join forces with these because they have incredibly valuable businesses that we need. And we can really meet in the middle. And like SRA is the perfect framework to meet in the middle, where it's a bi-directional compliance platform where both sides are validating the reconciled data to ensure that when the regulators walk in, they get a degree of safety and comfort through full transparency. I mean, that's the one thing Thread has committed. We are fully transparent. And we are our regulatory partners, and we have 3 of them. We're really embraced with them to help them through this because it's important. It's really important that we work with them to get them comfortable with all this. And that's my hope in all of this, is that we can work together to create safety and soundness. And I think this weekend was a wake-up call.
I agree. I think we came from the days of banks are the bad guys post 2008, right? Big guys. The challenger phase of fintech, and then the wait, maybe we need banks, but we'll just make them partners in the background we could use banks to distribute products to consumers, right? And now it's been a really nice shift back to banking, right? And so I think most of
this crisis wasn't corruption. There was nothing nefarious. There was no greed. This is not, I mean, 06 to 08, let's be honest, guys. That was
bad.
That was bad. I mean, that was unhinged greed for products that didn't need to be sold to people that didn't earn them or deserve them. If you think about it, the goal of a bank is to do such a good job in customer service and products and support that we do all our banking with them, right? Well, in the venture community that I live in, we don't do anything outside SVB. They take care of our fund banking and line of credits for capital calls, our partner banking, and then our portco banking, because they have 40 years of underwriting to understand how to extend venture debt to the portfolio companies. And they're pretty good at it. Their numbers for the last 40 years, and their numbers are good. It's like, guys, these guys knew what they were doing. So be careful there. As you said, people don't understand how systemic this is. They all wanted to say, this was a broke bank that you run, and it wasn't at all. I mean, you put any bank in front of you.
Hang on a minute. Yeah. When your bank goes under over liabilities, not assets, it's like, hang on a second.
He made the point. He's like, you got a bank that bought government securities that fails. Right?
Yeah. Let's go back to the source of the government scheme. I hear you.
I know.
We're the same way, man. Yeah.
It's like, let's go crazy on the give out money. Let's create inflation, chase it with rates and.
Yep. And bank, you don't loan enough money, and go buy governments. OCI, it's negative because you have to do. It's the same trade every bank has done to clean out their portfolio. I mean.
Well, and if you wanted to sit and say, well, they should have been trading and doing a different job along the way. Well, if you weren't making loans, you would literally just be booking those losses in a different way rather than holding them to maturity. So the whole thing is just brought to you by the government. We're here to help. Right.
Yeah. Well, the good news is, gentlemen, we all represent the fine, great community and regional banks that exist in this country. And what a watershed moment. To better identify a generation in this country that doesn't know how to spell risk on what risk is, right? Because I really look back at it, and I kind of grew up understanding what risk was, but I've kind of forgotten, and I'm humbled by that. And I'm reminded what risk is, and then B, that we've got a bunch of small banks out there that welcome these deposits, and that's what I said. KYB means something totally different now.
Good call. Damn good call.
That's right. Yeah. Well, and we've still got a lot of things to face. I mean,
shake out.
There's regulatory and legislative issues there that I think, when we talk about, I think again, asset quality has always been the issue. Now it's liquidity. And if you want to measure liquidity in a different way, and I don't want to go into it and scare the hell out of everybody, but there's a lot of problems out there.
Yep.
And we're moving faster and faster. We've been talking about a digital bank run for years, that this could happen at, lightning speed, but that's not good enough. What we really need to do is real-time bank runs.
Right. Yep.
And
Real-time fraud.
Yeah. And all of this is like, what exactly is your stopgap? And there isn't one.
Well, and I mean, you think about it, the speed that regulatory moves at hasn't changed in like 100 years, but technology has. And so the problems can arise more systemically and faster, and they can also be created faster.
Yeah.
I mean, think about crypto, right? I mean, that was my first thought on SVB and obviously Silvergate and others. I'm like, I mean, all of them are in a jam now, it's a mess.
Well,
It's an interesting thought. I think the FDIC did the right thing to get in there and push pause on the wire department, though. So I was very happy that they did that. It was very necessary. And you're right. And this, think about it, bailout isn't the word. It's a backstop because the assets are there. It's now what thing I really think about, I've been in venture for a long time, and I've always had a foot in banking and a foot in venture. If you think of the services and the amount of venture debt Silicon Valley Bank provides to the venture community, I mean, the second biggest doesn't even hit the radar compared to how good they are at this. So I sit here and go, all of these fine banks we deal with, they love the deposits, but they're not going to touch, or they don't have the sophistication or underwriting capability or history or experience. A few of them do. I'm not saying this to underwrite this debt bridge. So we sit here and go, wow, because that's kind of what caused a bit of the run, is because everybody was drawing on their lines because there's a cash crunch, and the venture money isn't flowing as greatly. So we got to sit here and think about the cost of equity, meaning the deal prices are going to come down. The cost of equity has just gone up because we don't know if venture debt's going to be available in its traditional sense, as SVB defined it, because they're the patriarchs. They created it. So I think about it a lot right now. It's going to be an interesting phenomenon.
Well, and I wonder when we talk about, VC and everything, let's just talk about a straight buyout of a company, right?
Yep.
The difference between what's our cash burn and what's our rate and what's our multiple versus profit.
Well,
If you're talking about a profitable company,
even multi-year multi-year revenue that's contracted is still a little tough, right? I mean, how a bank would look at collateralizing a loan versus the rest of us in the funding side, that's your just explosion moment, right?
Well, and the chasm is not going to get crossed,
right?
Because we just don't have enough of that knowledge in the country that speak venture. I mean, like SVB did, because you make. Hey, look, they're clearly good at underwriting it because they've been at it for 40 years with fantastic returns. And it really is going to be interesting. I think the alt lines of venture debt are going to come back mightily because, the one thing about that SVB debt that we loved in our companies, and they did a great job, it was market debt. It was at market prices. It wasn't egregious, expensive, onerous factoring like debt. The rest of the debt market looks a little bit more like that for venture debt. And that's good. I mean, some of these people are good at it, but it's expensive, but it's cheaper than equity.
But at the end of the day, there's companies created, technologies created that are used across multiple industries. That this is exactly what every other country wishes that they had, was a system that could produce like this.
Yeah.
And the innovation at the technology level, we just dwarf the rest of the planet. And to take VC and cut its head off because we got some emotional issue about too big to fail or bailing out a bank. This is kind of silly. And you would have taken down 2 or 3 different levels of the financial system at the same time and just kneecapped that innovation. And I'm going to tell you right now, if you want to be an American, that is the one thing we're really good at: agriculture, and really good at technology.
Yep.
And bioscience. We are really good. Well, it's interesting. I got to be on this WhatsApp. I got invited on it. It was fascinating. It was the YPO SVB WhatsApp thread. There were 1,300 YPOers on it. And I mean, you should have read it all weekend. These are the 1,300 most engaged, smartest, tireless entrepreneurs, fund managers. It had bank chairmen. It was fascinating to watch the community and what we were all doing in Safeguard. But I was so exhilarated by the end of the weekend because I got to see the volunteer spirit of America kick in. People were setting up using their cash to meet other companies' payrolls. I mean, it was like, it fired me up because it was, and then I sit here and then the twisted part of me goes, I bet you there's a couple activist hedge funds that created all this on Twitter.
Absolutely.
Man, we had that conversation.
Because I guarantee what a great opportunity to just go feed it. But you know what's sad? They fed the short all right, all the way to zero.
Yep. When we talked about it, as we were rolling through the list of potential buyers, we said, and I bet you that would be the list of short sellers.
Yep.
Right? Crush them and then buy them, right? Anyway.
Yeah. Well, I hope you bought. There's some good banks out there. I saw First Republic take a huge rebound. That is a great bank.
Yeah, FRC. Yeah.
They
well there.
Yeah, the FRB took a huge rebound. And you know, some of it was just ridiculous. And it's just fascinating because I'm sure with you.
FRB, I'm talking about the stock symbol.
Yeah. Live Oak's another one. Live Oak got beat up. That's a great bank, man. I mean,
It's a great bank.
number one SBA lender. I mean, I've traded them for years. They're great stuff.
Yeah, and they're in the business. I mean, they do a lot of our companies, and we have a good relationship with those guys. And it was a fascinating opportunity because, you know, we rallied our bank network, which was awesome, and they stood up and they were working all weekend. We had 21 banks out of our network work all weekend to set up deposit accounts for everybody. It was really cool to see. People were hopping in.
Yeah, we were interested in our Bankers Helping Bankers online community because it's banks only, right? And the association folks are in there, but no outsider prying eyes. And so there's a lot of commentary, as you'd imagine, on LinkedIn. But who really wants to say much or ask the tough questions in a public forum?
Jackass.
And so
got on LinkedIn and written a bunch of stuff, and there were plenty of.
Yeah, I mean, think about that. And then you had idiots making political statements going on. I was like sitting here reading this going, guys, there's no evil backbone on this. Like, guys, shut up. You know, I just don't have any patience for it.
Man, I love this guy.
Same thing, man.
You know, every time it's like the things are just driving me crazy. It's like, it's all I can do not to just get on there in capital letters and shut up.
Stop.
You know, just stop. Right. Not everybody's an expert.
Well, everybody wants their moment of fame, right?
Yeah.
Shows you who's not the pros, the people that take advantage of those situations, right? You know?
It was also really interesting, guys. I've been through some big crisis. I can remember the days of the crisis. I was on an airplane 9/11. I had 45 employees on the road in the towers. I mean, it was just, and I was a young man, and I can remember those points in time and dealing with crisis management. And you know, grew up in West Virginia in a lot of crisis, but that's beside the point. But watching this younger generation have to deal with this, it was interesting because you take the millennial and Gen Z, and they're all running and building these companies. It was a great opportunity for us to look through our portfolio and see the chops.
Yep. That's a good
see how people behaved, because people wanted to hear everything was all right. People wanted to hear, is everything going to be good? I'm like, no, this is,
we don't know yet.
We don't know yet, and we have no clue, but let's manage the triage. This is what we have to do. So we were on the phones. We had a war room going. We're contacting every one of our portfolio companies. Where's your cash? Where's your cash? It was great. I was proud of our team, but boy, there was some deer in the headlight out there too.
Yeah, I was one of them, man. We were actually worried about the service Granted, I mean, we had basically pulled the whole team off the bench for the weekend, right?
Yeah, we're.
But customer inbound from, I mean, I won't say the regulators' names, right? And the biggest firms out there
Well, yeah,
that are pulling together their war rooms
yeah, some of the large
and wanted us
companies,
to, right?
we're on the phone with them talking about responsibility and timing
And stuff.
Load management, balancing all of the different parts and pieces that
Yeah,
we've got to make
people
sure.
are worried about servers because, I mean, like the digital banking providers,
Yeah, I mean,
right?
if you
People
have
are worried
the-
about fraud.
The false impression
Yeah.
of a system, outage for just a few minutes could cause a bank run.
Absolutely.
And, it's like just what's necessary to put the pieces of the, back together.
Yeah, I mean, this was a
And here's the part.
big
This
thing.
is the step that, boy, I'll tell you what, on one side, but yeah, on the other, they did it. They
Yeah.
pulled it off. They got their, I mean,
Mhm.
should we we're talking about like pandemic level? I'm like 10-fold that.
Yeah, we could
Be
see huge
prepared.
volume.
And
Yeah.
not one single thing went wrong.
Yeah.
And I mean, hats off to these guys, just
Yeah,
working their asses off on a weekend to put the pieces together so we can open the doors Monday and the banking system works again.
Yeah.
That was a great job.
Yeah, next
Look
time.
at look at the stock prices. Look at the people have gotten over, and we finally got our cash. I mean, I gotta say, we sent the wires out last night. They got out of SVB, but they were stuck in overnight, wire operation. And I can tell you, I didn't sleep real well until they showed up. I mean, even one that understands what's going on, so
Yeah,
fortunately.
And the discussions about deposit and 250 and their responsibility. I'm like, if you
Yeah.
mow yards for a living and you're a business, you got 250 in the bank.
right.
I mean,
Everybody's
this isn't
problem.
much of a threshold of protection.
Yeah, I mean, I think to your point, Joe, I was explaining to my wife who works with us. And I mean, she's damn sharp at the system, right? And she's kind of asking how serious is it? And like all the way, I don't know, right? I mean, I'd tell you this, the smarter the folks in the industry, the more maybe not concerned, but question, right? The more unknown, the more you know, the more you
The
don't
whole
know.
system
Right?
is built on faith.
And there's a lot of what ifs.
Yeah, that's my message, I think, to everybody out there. Next time we're looking at a crisis or we're wanting to, talk about things like that, be cool. There's a time to
Don't
keep your head
scream
together
fire.
and- don't scream fire. Exactly.
Yeah.
Thank you.
Too many people did that. Final thoughts, man. Anything you want. I always thought about what's on your mind? What are you seeing in the future? Predictions, thoughts? Just give me some big ideas of what you're kind of thinking on and watching. And obviously that's kind of all we talked about today, but
Yeah,
anything you
I
want,
mean,
man.
and we have really strong investment thesis.
Mhm.
One thing I think a lot about is for smaller banks is loan participation and marketplaces to where you can be a co-invested author of really good deals and really good paper, because banks aren't going to be able to do it all on their own. And we're going to have, it already exists. These little working groups already exist. We need to, create better technology for the working groups. Deposit distribution is first and foremost on my mind right now, to create the overage, because some of us in banks are the beneficiaries of too many deposits, and we need really programmatic, systematic, and supportive ways to share those deposits into a partner network.
That's a whole other thing we need to talk about.
Yeah, let's have a sidebar on that one.
Yeah. So those are two. The third one is toolkits for embedded finance. We call it BAS or whatever, to where we can equip the banks with more tools to better onboard, so we don't have as many middlemen, because it's got to be direct. We've all talked about this before and where it's going to go in the end. Those are three heavy topics that I think about a lot. And then the whole office of the CFO, because we get to live in that. We get to look at all of the upstream technology that banks never see, that we invest in, that better enable accounting, finance, treasury, because it's all going to be one.
Yeah. Well, one last piece of this too is, guys, I mean, if there's a message I could scream out there to everybody, whether it's legislators or regulators, is that there is about to be a fork in the road where we're going to have visibility or we're not. And if you want to see a real problem, lose visibility. And if we can see the visibility from the fintech to the charter to the consumer and that whole piece of the action along the way, then okay, we can manage the problem.
So this time I've talked a lot about, Joe, I've seen the distance between the charter and the end user grow over the years. We all have. As that distance has grown, the not even visibility or exposure for a regulator to see it, you don't know what you don't know has grown. Right. And so you've got things moving that you didn't even know it happened. So I think that distance is a
platform underneath something that has
a
connection to another platform. And God knows underneath that. And there's no way a regulator can say, okay, I get it. I bring in 75 companies and 14 banks, and now I can manage the situation. There's no visibility there.
Right, visibility.
And we've got to clean that up.
Yeah, my final thought, if you agree, whoever's closest to the charter wins. I think the guy with the bank.
100%. That's the whole reason for Thread's existence. You just nailed it. I mean, but it's not out of greed, it's out of good. Like it's important that because it takes technologists and bankers to live in the same to be able to build this, because you talked about the distance, you talked about the amount of shadow capital, shadow rails settling off charter. And we have to have pure visibility, because if we have pure visibility, we can better tax it. We can better track it. We can find bad guys a lot quicker. I mean, there's so much that if you could sit down, and if I were running a regulatory body today, I would say, hey guys, we need to isolate this innovation to really understand, not isolate it from reporting. We need it to happen, because all it's going to do is streamline capital onto the rails and help us better monitor it. Like, this is good. Like, this is why we built this system. We didn't build this system so people could hijack it off.
Right. Well, and that's what, I mean, when people are like, what are you doing, the whole Bass Association thing? It's like to put the pieces together.
Yes.
So that people can actually see what we really need to have is this. We are.
Well, Chris Black called me and he told me, hey, I'm going to join this thing. I said, this is fantastic that it exists, because we have a philosophy that packs survive, lone wolves get shot. You know, it's like you don't want to be a lone wolf in this world. He doesn't, I don't. And so I really appreciate the leadership and work you guys are doing to put that forth. And you know, you've got our support always on it.
There's a lot of things that we do that, you know, people maybe, you know, what are you doing? It doesn't look like you've done anything in the last week. And it's like, some of these things take time.
Yeah.
And it takes a gathering. And honestly, like you said, I think this moment is going to do more for banking in the future than anything we could have all hoped for.
Well,
it'll
the most
do more
exciting
for technology as well, because now we can actually, this idea that we want you to go out there, produce technology and just run until you fall on your face, that doesn't work. And I think we can all see that now.
Yeah,
and so
opportunities everywhere, man.
There's a structured, smart way to do this.
Yeah, I mean, this is the most exciting time of technology opportunity for banks. Oh my gosh, it's amazing. I just wish
I agree. I just am exhilarated. I mean, like I'm tired. My brain hurts.
Same here,
man. You're going to be on the ranch this weekend. Same thing here, man. Just,
yep.
Like I went up, did 8 hours of hard labor on the farm. We call them farms in Tennessee. You call them ranches in Texas. And man, it was so cathartic to just escape and
as soon as we get done with this, we're gonna go out and do dumb shit.
Yeah, no, we're planting like 10 or 15 acres of milo and sunflower just for the dove hunt. Yeah, so
of course you are. Well, gentlemen, I can't wait to come down and visit you. I'm gonna run here, but I appreciate your time, and it's great to just sit here and chat and start. You know, we got to just keep fighting the good fight.
It was awesome, man. Love hearing from you, and appreciate the hell out of your leadership, all the things that you're doing in the whole ecosystem. I mean, can't say enough good things about you, man. So appreciate you.